Hello and welcome to a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, which means we are 3 days away from the end of the week and end of 2022, trading year at least. I'm Prashant, with me my colleague Sonia and Mangalam. Guys, hi, good morning.
Hi, morning.
Chugging along slowly but surely and getting there, right?
Last few days of the year, right? I mean, do we have our resolutions in place, our New Year resolutions?
Lose weight, I guess.
But that's it. You can't have the same resolution for the last decade, right?
Yeah, I mean, that's
By the way, I can tell you something really cool which I read the other day, and that made me feel nice and allowed me to eat a lot more. They say it doesn't matter what you eat between Christmas and New Year's for your weight. What matters is what you do between New Year's and Christmas. So eat along until the end of this year, and then we can have all our resolutions.
I mean, absolutely. If only it were that simple, right?
He works out every single day,
I mean,
so he can say that.
Yeah, he can say that. You can eat all year through, Mangalam. I mean, no problem at all. But we've got a little bit more in terms of participation from global markets, right? US markets were trading. They were not the day before, but last night US was trading. I'll come to that in a bit. But to start with the Nifty, the pullback continues, which also in a way shows that, as many were saying, that yesterday, Monday was not a one-day wonder, right? It was a ferocious pullback, forceful pullback on Monday, and yesterday was no less. Things came off a little bit towards close, but it was a very good close by the end of it. Now, where are we now as we start this session? The Nifty closed almost exactly, I'm saying almost because it's not point to point, but almost exactly at the 38% retracement, which was 18,130. The closing level, as you can see at the bottom of the screen, is 18,132. 18,130 acted as a resistance. The market sold off quite a bit, in the first 2 hours of trade and then pulled back, and we closed exactly there. What is that? That is the 38% retracement of the fall from 14th of December high to Monday's low. That's the number we put out yesterday morning as well. So we are right there. That's a zone you need to take out and clear out very conclusively and forcefully. If you are able to do that, I'll come to sort of downside levels, which I guess seem more relevant looking at the SGX in a bit. But if you're able to take this out, I mean, the next resistance is not very far. It's about 35, 40 points away at 18,170. Remember that sort of trend line from the lows of June, which is the low in June was 15,183. You draw a rising trend line. It's got 3 touch points, and the market broke that rising trend line on the downside recently. The retest level is 18,170, right? Which is, again, this is all within the next 100 odd points that we are talking about, very near term. Bank Nifty has got next resistance very close by at the 20-day moving average, which coincides with its 61.8% retracement of the same fall. The number is 43,188. That's a level to watch out for. On the downside, there are 2 points. On the Nifty, it's roughly 18,000. That is almost the low yesterday. It is also, retracement of the last 2 days. And on the Bank Nifty, it is 42,400, right? If you get levels closer to these, I think then you perhaps have got something going. You could think of doing something. The SGX, as I said, is indicative of a lower start. So we'll have to, I would say, wait it out. No reason. Chasing the move on the upside or downside straight away. And we get moves later on in the session, as we've seen. US markets were lower, as I was saying. Tech stocks largely under pressure. The Nasdaq was down about 1.4%. S&P was not that much. Tesla is a heavyweight, but the heaviness of Tesla is getting lighter because it's shedding market cap by the tens of hundreds of billions. Tesla down another 11%, 7th straight day of losses. We'll talk more about this. And 2 other points. Yields, in the last 10 days are up 40 basis points. This is the US 10-year risk-free rate. 40 basis points higher in the last 10 days. And oil prices are the other one, which are up 10% in the last 10 trading sessions. Both these are not great news for emerging markets, and I mean the latter, which is oil prices, specifically for India, which is a very large oil importer. So we've had 2 sessions of very decent kind of pullback. No reason to immediately try to buy the dip. I think this level, these numbers should perhaps correct themselves a little upwards as we go into and head closer to the 9 o'clock mark, 9:15 mark. But in any case, no reason to jump straight in right at the word go. Give it some time, let the market stabilize, give you a sense, and then take positioning. The levels, of course, we've left with you. 18,068 is what the SGX is indicative of as an opening. Sonia, hi.
Absolutely. And I mean, for starters, it's going to be a weak start, right? The SGX Nifty is under quite a bit of pressure. And as they say, between Christmas and New Year, waste your time and waste it well, right? So you don't have to trade. I mean, there's no need to trade because there's so much volatility in the market. You can just wait for the New Year to begin. Having said that, I thought, since we talk about the here and the now, I thought let me just sort of zoom out and tell you how the year has been. And it's been a really disappointing year for the US markets. I mean, the US markets are all set for their worst performing year since back in 2008. I mean, the Nasdaq is down almost 34%, which is the worst performing index amongst the three. The Dow and the S&P 500 down about 9 to 20% apiece. And Tesla, we were talking about that. It's been remarkable, the kind of fall that Tesla has seen. 70% this year and 40% in December itself. So investors are, sort of checking out of Tesla day after day. And that's important. I mean, all of the auto stocks, in fact, in the US have seen huge corrections, whether it's Ford, General Motors. That pocket is not doing too well. But in comparison, Nifty is not bad at all. In dollar terms, the Nifty is still down, but down about 8% in 2022 so far. And yesterday, the Nifty ended in the green for the second straight day. Once again, money pumped in from the domestic community. DIs bought about 620 crores. FI selling, but not that much, to be alarmed, about 870 crores or so. Nifty is holding above key levels, 100 and 200-day moving average. But there are a lot of things to watch. So on the US front, there are a couple of data points. Tomorrow, there's the pending home sales. There's the Richmond Fed Reserve manufacturing data. And this is important because if there's any indication of a slowdown in the economy or cooling off of the economy, then the Fed may not be too aggressive in rate hikes going forward. So that will be closely tracked. And in our own markets, you have the auto sales that come out on Sunday. I don't know who's going to be tracking it on the 1st, but I'll keep an eye out on the numbers for sure. Two-wheeler demand has actually worsened in December, so just keep an eye out on those stocks. Passenger vehicle, commercial, tractor demand has improved. But all in all, it has been a really disappointing year. So I guess, the true trend will emerge only from the first week of Jan.
First week of Jan or second week once the full flows come in. But, as far as our markets are concerned, the fact that the SGX Nifty is indicating a gap down is perhaps a positive for the bulls because yesterday, the last hour of trade could go all the way, could be credited to the way the Fin Nifty worked. It was the weekly options expiry for Fin Nifty that boosted the market in the last hour. As you can see, the Nifty saw a burst in the last hour, and that was led entirely by the Nifty Financial Services Index. And that was on the cards because for most part of the day, it was below that 19,000 mark. A lot of calls were written, and those calls were unwound as the index shot up between 3 and 3:30. And that was also, because of or led by the fact that last hour belonged to their heavyweights as well, HDFC Limited, HDFC Bank, as well as ICICI Bank. So this was how yesterday played out. Now, to test the market, the true strength of the market, we have to get past the moves that we saw on an expiry day and see whether the dip that the SGX Nifty is indicating is bought into or not. Because had the SGX Nifty indicated a positive start, then perhaps we would have run the risk of running into resistances. Yesterday's up move was classic, exits for both longs as well as shorts. So FIIs unwound a lot of long positions, unwound some short positions as well, as a result of which the net futures exposure remains unchanged at 47% on the long side as against yesterday. The important data point that stood out was that they sold around 3,800 crores in index options, and most of that was directed towards selling puts. And that is important because put writing indicates that there is a fair amount of base in the market. In the last two trading sessions itself, they've sold 1.5 lakh put contracts, and all of them expire tomorrow. So to that extent, again, the SGX Nifty's dip is extremely important. The put call ratio is at 1.1. Usually 1.2 upwards is where we see overbought zones. So we also have some sort of headroom in terms of the put call ratio. 18,000 call saw a lot of unwinding. 18,000 put saw a lot of writing. 18,100 put also saw a lot of writing. So that's telling you that the level at which the SGX Nifty opens is an important support zone. Where are the resistances then? The 50-day moving average on the Nifty, 18,219, and the 20-day moving average on the Nifty Bank, which Prashant alluded to as well, 43,188. Two things that stood out in terms of positive data for me yesterday. The India VIX also fell by about 4%. And secondly, the market breadth was firmly in favor of the advances for the second day running.
Okay, well, let's see. For now, the SGX Nifty is indicating a weak start. In fact, a lot of Asian markets are under pressure too. The Nikkei is down about 160 points as we speak. So it's going to be a slightly, difficult start for the bulls. But we'll keep tracking it for you minute by minute. Before we kickstart the show, let me tell you what's lined up in the first hour of the show. Today, we'll get you updates from the markets across the globe. Gary Schlossberg of Wells Fargo Investment will be with us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top stocks for the day. That happens at around 8:30 a.m. We'll also do a fundamental stock analysis with Devin Choksi of KR Choksi.
All right, momentumizers will follow next to Decode the stock rally. Post that at 8:45. We bring you the top stock picks for the day from our technical and futures and options experts. At 9 o'clock, Anuj will join in the studios for a quick trade setup. I'll bring you the market laser and things you need to watch out for. And at 9:10, Nimish with the standout brokerage report of the day. That's coming up before market opening. So that's basically the lineup. It's a power-packed one, as always.
Okay, lots to look out for. But first up, let's get you some commentary. We have Rhythm Desai of Morgan Stanley who gives us his view. He says an uptrending profit cycle, a likely peak in short rates in Q1 FY23 and ebbing global macro risks relative to 2022 make the case for an absolute upside to Indian stocks. That said, he adds, India's relative gains may continue on the back foot in Q1 FY23 as we have seen in recent weeks.
Well, some money market views for you. This is Kunal Sudani of Shirin Bank who says low volumes ahead of the year-end will likely maintain major pairs at familiar levels, within familiar levels. China-linked optimism underpins hawkish hopes from the Fed amid holiday season. He says the 10-year U.S. Treasury yield hit its highest in over a month. For the dollar INR, he expects consolidation to continue between 82.65 to 83 to a dollar levels.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says the bond market traded in a narrow range of 7.28 to 7.32% on the lack of any significant cues and dull trading on account of the year-end holidays. For the rest of the week, he says the market will assess the impact of the US storms, reopening of China on oil prices and weekly auction demand on the domestic front. He says the 10-year benchmark bond yield is seeing good support at 7.35% and is expected to trade in a range of 7.25 to 7.35%.
I got stuck on dull trading on account of holidays. But despite that, we have a lot of stocks to track today. We'll get to it in just a bit in our special top 10 segment. But let's apprise you of what we're looking at. Jubilant Pharmanova, Welspun Enterprises, Rail Vikas Nigam, Suryodaya Small Finance, Hari Om Pipe Industries, Punjab and Sindh Bank, Indraprasth Gas, Mahanagar Gas are on the back of positive news flow backing them. Indian Oil Corp is the only stock that on our radar that is likely to open in the red.